Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 26th of April. All right, now the key data to be looking at today, in particular for the Australasian session, is the Australian CPI. Now, the key number to look at is the one the RBA is looking at very closely, and that's the 6.9%, right? The year-on-year number. Of course, the monthly number will be, closely eyed, but this is the number they're looking for. And most importantly, focus on the range. Now, the numbers have been dropping off very quickly. So the high, well, you can't rule it out, but, we're more focusing on the low end of the spectrum. So a number below 6.7% really gives us a short Aussie trade, right? Aussie against the US dollar or Aussie against any number of other currencies. And the primary reason for that is this number here goes some way to answering what's going to happen next Tuesday with the RBA meeting, right, on interest rates. There's still a bit of a speculation that they may raise rates by a quarter and that'll be it, or they may remain on hold. A weak number here, right, around 6.5%, well, that'll confirm that they will be on hold and, they've really got inflation under control. They're not going to be cutting rates yet, but that's where the trade is. That's the easiest trade I can see. Now, if we get a number around 7%, well, the market's already a little bit short. Okay, so you'll see the Aussie dollar rally a bit. Now, let me just come over to the charts and let's have a look at this. Now, as I was saying there, we've got a bunch of setups here. Now, I'm just using the trend channel here to sort of really show you visually where everything's going. And the markets are not acting in unison at the moment, right? You've got the euro sort of going up, sort of just about to challenge the downside. Sterling also. Now, Aussie and Kiwi, they're in a different phase to euro and sterling, and that's unusual, right? So they are heading lower. The dollar's also heading lower, okay, as is dollar Swiss. Dollar yen, well, it's starting to break down a little bit, but it has been going up, as is dollar CAD, right? So the markets are not uniform. With that, to me, it's an automatic, okay, I've got to be careful. I'll decrease my trade size if I'm looking to trade these events. Okay, so just factor that in, the sort of unusual characteristics of these major pairs, because they do usually act in unison. Now, the other thing with the Aussie dollar, right, is if I just blow this chart up, you got to understand that the weak CPI numbers are factored in somewhat, right? That's why we need a weaker number than 6.7% to get it down. As I said, if it comes out like 7%, 7.1, right, it still means their inflation's lower, but I think we'll get a squeeze back up here, and we'll see how things go. So that's the two trades I'm looking for. The main one is obviously a really weak number. It gives me clear direction. Now, just understand, right, we've got the RBA next week. We've got the Fed. Now, the dollar index, and I know the euro is a big part of this, but the dollar overall is drifting lower, and so is the Aussie. So how does that work out, right? Well, we've got one working against the other. Short term, Aussie will go down today on the inflation numbers if it's really weak numbers, okay? But don't fall in love with the trade. It's a short-term trading opportunity because the dollar's already got a bit of weakness. I know it's sort of starting to look like it might pop back up to this resistance line, but at the moment, you got to work with what you've got. We've got weak dollar, we've got weak Aussie. That really sort of nullifies each other. So what actually works better is that, as I was saying, the slight chance that we get a number that's around, say, 7.1%. Okay, it's a lot weaker than the 7.8 prior number, and that'll probably keep everyone guessing what the RBA is going to do, but we might see a squeeze. Higher Aussie works well with a weaker dollar at the moment. So you got to be careful, right? Like, I know the inflation numbers are great numbers to be trading, but you've got to dig a little bit deeper to find the real answers here. Okay, now if I come into, actually, let me just come into the Aussie charts here on a long time frame. Okay, here's this little sort of cheeky little trend channel. We've got this resistance line to work with. As I said, if the numbers are 7% or around there, we'll see this lot challenged, maybe even top of the trend channel. On the dailies, it's breaking down. Everything looks good for the Aussie to be heading lower, but it's not just at the moment, right? So just be aware that I just don't want you to fall into a sucker trade. And that's what you're trying to avoid more often than not. Know exactly how the market's positioned, and then you can really come in and attack it. 6.9, the expected number. The bottom end of the range is what I'll be focusing on. I'm looking for a number below 6.7. If it is, I'll be looking to get short Aussie or some of these other Aussie crosses. It should go down. Now, the inflation numbers are one trade where the Aussie crosses will come into play, right? If it's weak Aussie numbers, you're selling, you're buying sterling against Aussie, you're buying euro against Aussie. And once again, it's a short-term trade. We've got the ECB next week as well. But this should give us some answers as to what the RBA is doing. I would suggest a number around 6.5, so below the low end of the spectrum. We'll keep the RBA on hold, and that should see a decent move to the downside in the Aussie. All right, guys, have a good one. All the best. Cheerio.